recent events in Syria are more a blow of the relationship between Turkey and Russia. Turkey was expected to join the Brics. So clearly this is maybe on hold, or it could be delayed. I think that this has reinforced, I would say, the alliance between Russia and Iran, because Iran is the kind of the last ally of Russia in the region. But I think that for markets in general and for financial markets, would we see a destabilization in the region and in Iran in particular, or probably also kind of issues in Saudi Arabia? This would be the catalyst for the oil price to significantly rise in the next 12 months.
You're watching Capital Causa. My name is Danny, and today's guest is Laurent Lecoeur. Laurent, thank you so much for coming on and for helping me pronounce your last name.
No, it's perfect, Danny. Thanks for having me on your show.
So tell us about yourself. Who are you? Tell us about the macro butler and all that stuff. What is your origin story here, Laurent?
Well, I'm originally from Belgium. I'm about to turn 50 years old. And so I work in financial markets for around 25 years now. And I've just started the Macro Butler end of last year. And this is a newsletter. I'm also advising high net worth individual across the world.
Interesting. Okay. Well, let's start off with your macro view of the world. What is front and center for you right now? What is the top story on your radar screen?
Well, I look at the macro environment through the lens of some market indicators. So if you look at the major economies like the US, Europe, and Japan, they are still in an inflationary boom. China, surprisingly, is an inflationary bust. But I think heading into 2025, there will be a lot of changes in the US in the fiscal policy and potentially also in the monetary policy. So I think the risk of the world moving from an inflationary boom into an inflationary bust have increased. And so that's what drives asset allocation for clients in the next 12 months.
When you say inflationary bust, are you referring to disinflation or deflation?
Well, when I talk about inflationary bust, it's more like others call it a stagflation. So it's an environment where inflation is high and economic growth is lower.
Okay, so just to kind of recap, you're looking at China going through a stagflationary event, but the U.S. is an inflationary boom, correct?
Yeah, in fact, how I look at things is I use market data, and I can explain maybe in a few words. In fact, if you consider that the economy is just energy transform, and that the value of the stock market of a country is kind of the ability of all its companies to create value for its shareholders and for the nation, you can look at an indicator that is the ratio between the stock market and the oil price. And then you look at the position of this value of this ratio against a 7-year moving average. And if it's above the 7-year moving average, you can draw the conclusion that the economy is in a boom. And if it's below, it's in a bust. So if today we look at the ratio between the S&P 500 and the WTI prices, we are above this 7-year moving average. So the US is still in a boom. And to look at inflation, in fact, I look at the debasement of the currency. So I look at the ratio between gold and bonds. And here, in fact, since end of 2019, this ratio of gold versus US Treasuries has been well above the 7-year moving average. So we had the US is in an inflationary environment. So whatever Wall Street tell you, in fact, inflation has not gone away, and for now, it's still an inflationary boom in the US. But of course, everything can change next year because we will have tariff, we will have a new fiscal policy, and that will for sure impact the profitability of a lot of companies in the US. So we will have to see for how long the S&P to oil ratio can stay above this 7-year moving average.
If Trump doesn't act the same policies that he said he would, as in he doesn't stray away from them, what do you see for the United States and the world in general? So with
Well,
tariffs, fiscal cuts, etc. Go ahead.
I think that what I see is that I mean Trump as a strategy, right? I mean, if you have read the art of the deal, you know that his way to negotiate is to throw a grenade in a room and close the door. So clearly we can expect that all these tweets are kind of this part of this strategy, but. At the end of the day, what is he looking for? He's looking to create more jobs, right, in the US. So he will need to stimulate capex and industrial capex for the US. So the only way that I see that this is done is in fact by imposing tariff that could be decreasing over time and decreasing for companies who are trying to do investment in the US. But if you look at past history during the 1930s, the US also had a very tight policy in terms of tariff, and this has been the reason that we had, I would say, the stagflation of the end of the 1930s. So I don't see that this time will be different. So clearly, tariff are negative because there's a need of the companies to pass through these higher prices to the consumer. But and everyone can understand that also there's margin pressure. So you will see, in fact, this tariff reflected in the evolution of the stock market. And on the other hand, and I think that we can talk about it, but I think that Trump won't change that much in terms of geopolitical policy because I mean it will be very difficult for him to change the course of the war cycle in the Middle East and in Eastern Europe. So you can think that at the same time that the US is imposing tariff, you have higher oil prices, and this is all this ratio of S&P to WTI is going to move slowly and surely below the 7-year moving average, which will in fact be the signal that the US enter stagflation.
Interesting. So oil will begin outperforming the S&P essentially.
Yes, in fact, that's the first trigger for this stagflation. I mean, as we have seen also during the 1970s, and in terms of allocation for stock pickers or sector pickers, clearly it's not all that bad. It's just that you need to change your allocation from the energy consuming sectors into the energy producing sectors.
Hmm.
But of course, since the oil and gas sector is barely 3% of the S&P 500, so I mean, the outperformance of the oil and gas sector won't help that much the underperformance of the other sectors.
How much of a risk premium do you see on the current price of oil right now, given tensions in the Middle East and Eastern Europe? Is there a big risk premium slapped onto the oil price already, or no?
Well, I guess the risk premium at $70 per barrel WTI, you can say that there are very little geopolitical risk premium in the price. And this has been mainly because, I mean, supply from Russia has not really been disrupted in a way that, in fact, Russia is selling oil to Southeast Asia and India. I mean, Rosneft just struck a deal of 10 years a contract with Reliance in India selling oil at discount to the oil market, the global oil price. So I think that for now you cannot say that we have seen a lot of disruption in the oil supply chain, but of course, and I think that what has happened over the past few weeks in Syria could have much more impact on the supply chain of oil from the Middle East.
How so? Can you explain why?
Well, I think that this create increasing instability, and you also have seen over the past few days even Trump starting to call to bomb Iran. So I think that would this escalate into a more broad-based war with Iran and also potentially the rest of the region? I mean, we are talking about the major supplier of oil in the world. So, of course, the impact will be much worse for Asia and Europe than for the US. The US is almost, I would say, self-independent in terms of oil supply. But I mean, you will see oil price rising. Of course, one way that Trump could solve this problem would be to kind of put an halt of oil export out of the US, and this will keep oil for domestic consumption inside the US. So this will kind of reduce the impact of the crisis in the Middle East for American consumer. But I mean, everyone has to understand that kind of everything is connected in this world. If Asia and Europe are not doing well and are heading into a stagflation, at some point the US will also follow the rest of the world in a stagflation.
Why aren't more investors taking the war risk seriously, do you think?
Oh, I think that there has been quite a euphoria since the election. I mean, the election, in fact, was expected to bring some chaos domestically or even overseas. And at the end of the day, we are more than a month after the election, and everything seems so quiet in the US. Everything seems so quiet outside the Syria crisis. So I think that investors are kind of very complacent. And also, I mean, that's the end of the year. A lot of investors kind of are happy to close their books and wait for next year. And especially since next year will really start, I would say, on January 20 years after Inauguration Day. I would say that the next few weeks, unless we have a big event geopolitically, we can expect the market to trade sideways until we really see the Inauguration Day.
Interesting. Well, what assets benefit the most? I know you said energy, but what specific energy assets stand to benefit the most?
Well, I would say that the domestic US oil and gas companies will benefit the most from this trend. As I said, the US is expected to be the less impacted versus the rest of the world. And also, at the end of the day, you will see more inflows into US asset because if you look at the world, Europe is in a mess, the Middle East is in a mess. Asia has started to see also some uncertainties of what happened in Korea over the past few weeks. So, I mean, the only region that still play a safe haven is the US. And so the flows, the foreign flows will flow to the US. And so I guess that the US oil and gas sector will benefit the most from this.
Interesting. Have you seen what's going on recently with the Chinese yuan? The 10-year yield on the Chinese yuan is depreciating at a fairly substantial amount, and you also see it across various other currencies. Can you explain why that is?
Well, I guess what's happening in China is a bit between a rock and a hard place, right? Because they clearly have a problem with their real estate for more than 2, 3 years now. But the government didn't really want to stimulate because I mean the government think that the Western style stimulus are not appropriate for the Chinese economy. So I would say that the Chinese government stay on the side, just put a bit of stimulus here and there. I guess that China is playing the long game. I mean, China has no election. You don't have a 4 year mandate or a 5 year mandate like you have in France or in the US. So I guess the government can take a much longer time horizon. And in fact, China is now mostly redirecting all its financing to its manufacturing sector. So, I mean, China has become a leader in EVs, has become a leader in car manufacturing, also in electronics. And on top of this, China is looking to develop its trade relationship with the rest of the global south, so with Southeast Asia, India, and Russia. So I guess that China what we should to look more at is related to like the cross FX rate of the yuan versus ruble, the yuan versus Indian rupee or Indonesian rupiah, rather than the yuan versus US dollar. Because at the end of the day, I think that China will try to reduce as much as possible its trade relationship with the US. And in fact, Donald Trump will be just another catalyst to this trend.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. So with the collapse of Syria and Syria being effectively the linchpin between, Europe and Middle East and Asia, does this kind of, set BRICS back a bit in the face, in terms of Russia, right? Russia is one of the big two components of BRICS between them and China. Russia took a massive loss in giving up Syria. Russia really came onto the world stage as a major player in 2015 when they kind of, put their hand in the Syrian war zone. And they acted kind of like a competitor to the United States as an arms dealer, as a protection racket, so to speak. But they've effectively left their first ever client state, which is Syria. Does this harm the BRICS alliance? And if so, how much?
Well, I think that Syria, the story about Syria is all about the pipelines. And if you remember, there was a plan of a pipeline between Qatar and Turkey, and this was the way that Americans wanted kind of supply gas and oil to Europe and divert supply out of Russia. So I think that geopolitically, and I'm not really a geopolitical expert. I mean, I try to interpret it, what's happening. I guess that the recent events in Syria are more a blow of the relationship between Turkey and Russia. Turkey was expected to join the BRICS. So clearly, this is maybe on hold, or it could be delayed. I think that this has reinforced, I would say, the alliance between Russia and Iran, because Iran is the kind of the last ally of Russia in the region. But I think that for markets in general and for financial markets, would we see a destabilization in the region and in Iran in particular, or probably also kind of issues in Saudi Arabia? This would be the catalyst for the oil price to significantly rise in the next 12 months.
It also seems like it would be the catalyst for the gold price to rise. No? Do you agree with that?
Yeah, of course. I mean, I think that people must understand that during a stagflation, the best asset to own is physical gold. And if we look back at previous stagflation, like in the 1970s, that was the asset to buy and hold. Equities need to be traded actively, and you need to be very selective in terms of sector selection. But also, I mean, we have seen and we all know that the weaponization of US dollar assets since the start of the war in Ukraine has boosted the gold price. And if we see another round of wars in the Middle East, or also potentially in Asia, you will see increasing interest in gold. So I think that I would say that one of my view for the next 12 months is that the US dollar is going to appreciate against all fiat currencies, mean we see higher dollar against euro, yen, yuan, but it will depreciate against gold. So I mean, we are in a relative world, and of course, if you are not a US dollar based investor, you can own US dollar cash, but that's the risk of the weaponization of your asset. And the best is still to hold physical gold in your own vault or in a or store in a country that you feel confident about the government.
How bullish are you on gold? How high do you anticipate gold going, despite the fact that it's already risen to $2,600, $2,700 in the span of a year?
Well, I won't be surprised that next year we see another 20 to 25% increase in the gold price in US dollar terms. And also, as I said, I'm for Asian investor, they could see the gold price rising over 30% in their local currency.
Interesting. What about silver?
Well, silver is much more volatile than gold. There's some industrial application. So, in times of stagflation, silver is usually underperforming gold. But I would say that since you need to have at least 25 to 40% of your portfolio in physical assets like gold and silver, you can diversify. I think that, in fact, those who have the risk appetite and the stomach for the volatility can also look at physical platinum because it's very cheap relative to gold at current price.
Interesting. Anything else? What about natural gas? How do you view natural gas?
Traders know that is the window maker. Natural gas is a very local market. I think that in the US, there is ample supply of natural gas. Now, interestingly, 1 week ago, there was an interesting news coming from ExxonMobil, which is planning to build power generation using natural gas to power AI. So I think that in fact the US ultimately will understand that it's better geopolitically and also economically to use natural gas rather than uranium to power AI. So there will be increasing demand of natural gas in the US. But I would say that the price is expected to be relatively capped because there's some per supply of natural gas. In Europe, to be honest, if we look at the natural gas price, I think that it will go much higher, and it's because, most of natural gas for Europe is now coming from the US or from Qatar. So if you have supply chain disruption issue in the Middle East, and then the US decide, I would say, to limit export to Europe, of course, the natural gas price in Europe will be much higher.
Interesting. You sounded a bit bearish on uranium. That may or may not be the case. I'm just putting it out there. What are your views on uranium?
Not that I'm bearish on uranium, but I look at, supply and demand, and I match it with geopolitics. And to be honest, for the US, there's ample supply of natural gas. There's very little domestic supply of uranium. The US import most of its uranium from Russia, Kazakhstan, or even Canada. So I don't see really why the US energy policy should be focused on uranium rather than on gas. So I think that there's a bit of a hype on uranium from time to time. It's justified, but I would say that nuclear power is more a reasonable source of power for AI in Asia rather than in the US.
Interesting. Do you see Germany and the rest of these countries that went totally green? Do you see them scaling back and kind of embracing nuclear?
Well, I think it's difficult because Germany is like France in a very unstable political environment. I would think that unfortunately the greenwashing is not over in Europe. There will
Really?
be I would think that there will be more greenwashing coming, and I don't see any big reversal. And to be honest, I think that it's a bit too late to take a reversal on these greenwashing policies. I personally think that Europe has, I mean, very little interesting future, is very unstable on a political basis, higher cost of energy. I mean, this would be the first region to fall into a stagflation very soon, I think.
Interesting. So it doesn't appear like you're not geo but geographically you're a big fan of what Europe is doing. What geographically speaking, what areas, countries are you bullish on? I mean, you're in Thailand right now. Where do you see the most opportunity?
Well, I think that you need to make a difference between economic growth and the performance of the stock market. It's not really always correlated. So, in terms of economic growth, I think that India has a lot of potential in terms of economic growth. But when you will discount the performance of the Indian stock market in US dollar, you will lose a lot in terms of negative currency impact. So, I would think that for the next 12 months, the US is still the best place to be invested in US dollar asset, and the US stock market still offer the best opportunities. Saying that, I mean, in by the end of next year, I mean, if we talk again around this time of the year, I would think that probably it would be time to think to diversify. You can look at India, which remain, I would say, a very good growth story. China is, I mean, people must understand that the Chinese government has no interest in the performance of the stock market. What the Chinese government care is that the companies get their financing from the banking system, and they create international champions that can export in ASEAN and elsewhere among the global south. So I don't think that the Chinese government will do anything to boost the performance of the stock market. The stock market is cheap, the valuation is cheap, but I would say it's kind of a value trap, at least for the foreseeable future. And if investors are more adventurous, they can look at countries like Vietnam or Uzbekistan. But I mean, we are not going to put a very big chunk of the portfolio in countries like Vietnam or Uzbekistan. So at the end of the day, you go back and look at the US. And I think that, I mean, my opinion is that for instance, that next year the energy sector will outperform the Magnificent Seven. Means that you will have a very big rotation inside the US equity market. You may see the S&P 500 having a kind of a very disappointing performance all in all because of this rotation, but there will be a lot of opportunities in this sector that are benefiting from higher oil and gas prices and also from the reshoring of US manufacturing.
So, Laurent, the energy sector is much, much smaller than the than the broad market. What kind of asymmetry lies ahead for energy in that case? I mean, if you're transferring all this money from the broad market to a small market like the energy sector, I mean, that's going to be huge, isn't it?
Yeah. I mean, nowadays the energy sector is around 3% of the S&P 500, right? I mean, so you can expect that when this rotation comes, you could go back to the 1980s when the energy sector was around 20 to 25% of the S&P 500 in terms of market cap. So I guess that there's the opportunity, and there's a lot of opportunity for stock picker in this market, because the last 2 years, to be honest, you didn't need any advisor. I mean, everyone could just pick the Magnificent Seven and sleep on it. But I think that next year will be much more different. You will need to look at which sector, and inside which sector also the quality of the balance sheet will matter a lot. I mean, interest rates in this environment are going to go up. long dated yields are going to move up. I think that we cannot rule out to see the 10-year yield around 6% at some point in 2025. So all these companies that will have to refinance their debt next year will be penalized. So you need to look at the balance sheet. You need to look at these companies that are net cash, that are generating positive free cash flow, because this will be kind of one criteria for performance as well.
Interesting. Well, I think I've covered pretty much everything I wanted to go through. Any topics that you want to bring up before we wrap up?
No, I think that investors should really be mindful. They should, I would say, don't underestimate the impact of this tariff on the economy and on the stock market. And also, I would say that it's important to get educated. So, in fact, my newsletter is also to get people educated financially, because I think there's a lot of lack in terms of financial education at school and also among adults.
Okay. Well, Laurent, thank you so much for coming on. Where can people find you?
They just can Google the Macro Butler and they will find my newsletter. And I'm also on X and I'm on LinkedIn as well.
Okay, we'll have the link to your X account and the Macro Butler down below, so be sure to check it out, guys. If you enjoyed this interview, be sure to give us a like, comment down below. Go, Laurent, go. If you disagreed with anything, however, let me know. I do read the comments. Also, remember to subscribe. We do get a good bit of a positive feedback from the YouTube algorithm when you guys subscribe. So remember to hit that subscribe button. A little bit goes a long way. And then finally, check us out on Substack, capitalcosm.substack.com, if you want to get these videos before the YouTube audience does, and from an ad-free form. And with all that said, thank you guys for watching. Laurent, thank you for coming on. I'll catch you next episode. Bye, y'all.
Thank you.